today. I'm just going to break down quickly what's happened today on the charts and any potential moves that could have been made. Quite a messy price action overall, but there was some corrective sells to be took, as we did get some negative news for the pound today. The UK government came out and said that the Brexit deal is not where it needs to be, and they do need further talks to be had and solutions made to to basically sort out the exporting and importing side of Brexit, which has been affecting businesses with the delays of getting products, getting supplies in and out of the country, and the main reason they want it sorted is because of medicines and vaccines and such. So negative news came out just short of 8 a.m, around 7 and 8 a.m, and it wasn't priced in until we had pretty much the new 4-hour open at 10 o'clock. We did get quite a strong bullish push prior to that. We closed above these previous highs, grabbed liquidity just from this wick high here, grab liquidity above there, and then we instantaneously didn't even had a tiny nipple candle on the 4-hour, and we just pushed down, and that Brexit news was priced in. If we do zoom, when I zoom into this 4-hour candle, you can see the potential, the reactions to the key levels, psychological levels, and with having a bias that there is potential, there is negative GBP news today. Having that fundamental bias, you could have took these corrective sells down, as it would technically still be a counter trend trade. And like I said in previous videos, I am only looking for buys, but this is a good example for reacting to news. And if you see the price action which reflects the news that's been given, then there is place to be taken. For me, going off the 1 minute structure, this would entice me, is these 3 rejections, triple top at the 155-200 level. I like how it's respected it 3 times, and maybe the best entry to take would be, if you were being quite aggressive, or maybe actually, if you're being quite aggressive, you could take an entry here. This candle here, as we closed above the mini consolidation, but we actually didn't close below these wick rejections, so maybe not. I think if you were patient, the best entry points would be around this area here, as we started to see that the break of the uptrend throughout London Open. Look at that as well. It's nice to see. Nice break and retest of the start to see a break and retest of the trend line, and then we actually breach these higher lows, start breaching them and forming resistance above them. So an early sign of bearish corrective structure forming. And then I think the safest entry would be, well, either one, catching entries around at the triple top after this strong bearish candle here, strong engulfing bearish candle, or waiting for a break and retest of the consolidation and trying to grab entries around the top of this order block. So around there looks sensible. And obviously, as long as we are still respecting these highs, and we're not breaking these highs and going out. You could close a trade at a small loss of around 2-3 pips. If you was to start getting closures above this minor resistance level, and you started closing above, these minor supports, which price is reacting to, you start closing above these candle bodies, you can expect price to at least go and test the top of the this range here, and you could deem that as price not being ready. You know, your entry, the sell entry not being ready yet. So you could close out at 2 or 3 pips, 2-3 pip loss, minimise the loss at a quarter percent, a third of a percent, and then look for better entries. So, but obviously from here, price does push down. Do you get these closures? Nice strong bearish candle here, and what I'm noticing here, as you are getting the pullback, but as long as I be bearing in mind that the relationship between candle bodies and obviously the bigger sized candle bodies showing the strength, the directional strength of the bears here. So this for me shouldn't be a problem in a live trade scenario, because I'd be thinking, right, well, we are getting a pull. This is just a pullback. Price moves in waves, and look at how many minute candles it's taking to even engulf half of that bearish push down. So for me, bears are still strongly in control. And then you start getting the bigger bearish candles coming back into play. Again, another little pullback. Small bullish candles, and another strong bearish candle. And I think this one's a real indication that you're going to get that corrective phase down to your key level point. So maybe if I were closing around here, I'd just take partials, 50%, whatever it be, 50%. It's something I need to think about more, to be honest. When I am reaching my first key level zones on GJ, I think it would be best to have a set percentage of a trade which I'll take off. That's something I'm still mulling over. What pops to mind is possibly 80% closure, or at least 50%, and then once you banked your first percentage and you've hit your my first TP zone, then setting stops at break even and just letting it, just securing profits. In terms of managing this trade, managing potential runners, as we can see, we still trade idea is still very, very valid. I think if we was to get closures above these higher lows here, then that'd be a sign of price. There's a good chance, a higher probability that price would go back to entry and to close the rest of the runners. But as we are still running holding runners there, and there is current corrective. We're in a current corrective bearish. We've got current corrective bearish market structure, and the fact that fundamentally we know that there is negative Brexit news today. So this could be used as a catalyst to push price down to a better demanded point and grab liquidities from buyers before a potential move up to the upside. So we can once we get this closure above this little order block here, we start to see gradually a retest of the order block and a rejection of 15500. So this could be if it wasn't in the initial move here, then this could be another great entry point, really. Let's have a look at the timings of these candles. So that was 13.20. That was the start of the new hourly candle. No bottom wick, or no top wick on the hourly candle really. Tiny nipple. Oh no, yeah, there's a small, very small wick on the hourly candle. And then we start getting that push down through New York. Retest the 155 area. Nice candle body closure below. Fairly strong. I think safer play would be waiting for price to close below this minor support here. Still a very small stop loss, and then you got a 2-to-1 entry there. And now, if you get closures below, you can continue to ride the buys for a sell, sorry, and then you can maybe start to close around this area where you start to consolidate, or maybe this area here where you start to close above recent lower highs, or maybe here we're starting to see a higher low forming here. So for me, this is maybe a sign of a potential pullback. So better off to close entries around either this point or this point, because there's a higher chance that price may pull back up to 154,800 and potentially close above it, and then correct some of this, majority of this bearish move. And but yeah, it's interesting. You can get a lot of joy with having tight stop losses, I feel, watching recent price action, because you kind of get a feel anyway if your entry points are good. Oh. Can't make any noises. You can kind of, when you do get the correct entry point, you can, price really should be moving down, and there shouldn't be too many pullbacks from, you shouldn't be going in too much drawdown really if you have got the correct entry. It's all well and good cherry picking these moves, but the idea is that me continuously finding the best moves of the day and how to take them and how to manage them and exit them will put me in good stead and sharpen my skill going into the live markets. Another thing I've just thought of, I could probably backtest the session on replay mode without knowing what happens. That's something, a possibility I could do. I would need to keep an eye on the newsroom as well, so I have an understanding of what's happened during the day, so I can use that as my bias as well. Because if I wanted to check the newsroom, then I wouldn't have been aware of these potential sells to be had. Only purely off technicals I'd notice it, but I would like the fundamental confluence as well, because I don't really feel comfortable counter trending pairs really, unless there's solid reasons behind doing it. But yeah, that's GJ for today. Pretty nice market structure really. It's quite slow, but it's as expected now, isn't it really? It's throughout selling May going away and start of June. We've had slow moves, slow volumes, low volumes in markets, and only real pushes during fundamental catalyst. Another sign that this was a fundamentally driven move is just by the size of the bearish candle. Quite strong, heavy, engulfing, quite a lot of volume compared to how many pips is it? It's over 100 pips in it. It's over 100 pips, 110 pips or something within a 4 hour candle and the start of a new one. So that's a strong indication that it was fundamentally driven, like the candles to the left there, which was Bank of England news. Right, that's enough for GJ. In terms of what I'd like to see tomorrow, obviously I still am bullish on GJ. I feel that if the Brexit news was that bad, then we would have seen a stronger downside move. Maybe this was used just as a grab on liquidity at these lows, and we could see an upside push on the back of this, because I've noticed in the past as well that banks, institutions, or whoever is dictating price algorithms, they like to give stronger moves in the opposite direction of where they're intending to go, which kind of scares people from entering and gathers liquidity. Scares people on entering in the real move and gathers liquidity as well. Prime example of this is the move last week, where we had gold push down hard, and then we had the weak dollar news, grabs on liquidity from the lows, failure to a reaction of a weekly level, and then weakness in the dollar due to negative FOMC. So this is what I'm seeing. I see this as something similar, potentially. For safe sells, again, sell before 154, 153, 800, or what? In fact, it's 154 actually. Sells before 154 for me. Bottom of the order block within before the push to the upside, and safe buys. I'd like to see. Obviously, trading in this range is not ideal. We are retesting. We are breaking and retesting at this point. And we are struggling to. Oh, we have actually closed. We are closing below the recent high, but as we know, classic market structure, just because we're closing below the previous high doesn't mean we are now bearish. We would have to break the lows, in my opinion, to the lows of the moves to the upside, to take safer sells, and there'd be a clearer change in market structure at that point if we was to break and retest below 154. So in terms of buys, it's not looking too promising really. It's not looking too promising at the minute for entries, just going off price action. But if it was to get, see, we are forming some kind of support around here. If it was to get a rejection of 154 again, or some solid 4 hour support around these areas, then I would be maybe inclined to take buys above 154 800, with just watching sensitive price areas to the left while scaling up that move. And there is a nice 30 pip range to be had while doing that. Look at the 1 minute. Yeah. As you can see, we are starting to get that potential bullish market structure starting to reform. We'll probably consolidate and range between this later New York's American session, North American session, and we'd probably maybe get another pullback to 154, 500. If there was setups around London and we failed, if we did reach 154, 500, grab liquidity from these lows, and then start to see a double bottom formation, I would be tempted and started seeing exhaustion around 154, 500 on the 1 minute. I would be inclined to take high risk, high reward buys, and potentially catch the bottom of an upside move within this range with plenty of pips to be had. I'd be looking to ride buys up to potentially 800 if we get the price action, and if we got to 800 and started forming support above it, bullish market structure, and got above this sensitive double top here, I feel we could go up and grab liquidity from these sellers here, and start. And if we do get the confirms, ride the buys towards 155, which would be a very nice move. If not, and we do start to consolidate around these areas here, around these lows and these previous support areas, we do begin to bounce around there, I would look to take potential buys above 154, 800, watching price action to the left, or you could potentially wait for closures above these sensitive price areas here, because we still would have 15 pips. If you have a 5 pip stop loss, you could still have a 3-to-1 trade. But ideally, I would like to see break and retest of 154, 400, and then get in at that area. And then if we do get closures, if we get rejections at these highs here, and just simply close out or put stops at break even, make it risk free at that point. And if we do get the closures above and retest of it, happy days, we can start riding these buys up to 155 and grab this clear price action to the left and correct the Brexit news, some of the Brexit news. So yeah, that's what I'm seeing on GJ in terms of what's happened today with market structure and potential entries for tomorrow. I'm going to move on to gold now. So with gold, first thoughts is that it looks dog shit. Not a lot of volatility within gold today. Yeah, I'm surprised we've found a trade within this. Oh no. Nah, nothing to really talk about with gold. In terms of trade entries, if price was to push down to 1833, and we was to get rejections, failures to maintain below it, like on this Asian candle here, on this candle, 4-hour candle throughout Asian, and this perfect retest of it during the 10 AM London candle, it is clearly a sensitive price area at 1833, and we are having failures to close, so we are reacting to it and getting nice reactions off it here. And last 2 times we've had reactions to it, we have reached or just got near to 1897. So if it was to push down to these levels, and again we see the price action confirmed similar to Monday and Tuesday, then I would be looking to take buys around this area. I'm just going to set an alert there. As well, I think for safer buys, obviously the safest buys are breakout buys above 1912, with some sort of fundamental catalyst behind it, giving the US dollar some weakness. Let's look at how the DXY US dollar index was performing today and see if this has anything to do. Alright, okay, so with the DXY we're starting to see some exhaustion, sellers exhaustion at the minute. It's probably, and some ranging conditions probably, which will be the reason behind the rangy indecisive price action on gold at the minute. In terms of where it could go next, start with the weekly. Yeah, so at the minute we are forming a double bottom. We are at a double bottom here, and we're having failures to close below pretty much $90, isn't it, really? Yeah, we're failing to breach past $90. Is a sensitive price area. Very sensitive. Around these areas. We could eventually get down to $88, but at the minute we are forming a double bottom on the weekly, just around $90 at the minute, floating around that price area. Does look like we could potentially see some strength in the US dollar if we start seeing some signs of bullish momentum and optimism. Maybe some fundamental optimism in the dollar. Nice bullish weekly closes, and maybe we could start seeing some corrective phases within these bearish USD pairs. That's a possibility, and that obviously goes hand in hand with the potential gold corrective structure we could get, as talked about in previous webinar. So yeah, we need to be keeping an eye on more on DXY. I do forget to do it, and can be useful, especially with trading gold and just having a second opinion on the strength of the US dollar along with fundamental bias. So yeah, we do get closes above here, these sensitive price areas. We have had nice reactions, nice pushes to the upside. Once we have breached $92 or $90.20, should I say. Once we do get above these levels, we do seem to get a bit of bullish enthusiasm, and then it has been corrected a lot of the time. It has been corrected as of yet. Still obviously bearish on the US dollar. But once we start seeing these highs get breached, then it would be starting to look more bullish on the US dollar. So yeah, in an indecisive stage at the minute, slightly corrective, but we're not really. It is struggling to push to the upside. Maybe it's just a consolidation before further pushes down towards these lows of $89. So still definitely bearish on the US dollar. Let's just keep an eye on the fundamentals and see if we can get a head start in potential changes in sentiment. Right, so I think that's pretty much does it for today. Yep.